Okay, let's move on and let's talk the market moves to the minutes. As we're looking into the second hour now, finding some support around the 0.5% positive mark. Got Chris Conway for you in Melbourne.
Yep, Chris from the Australian Stock Report, of course. Chris, good to have your company on the show this morning. Talk us through the market today, because, I mean, it is interesting to see, you know, really across the world, we saw green on screen overnight. We're obviously following today, although underperforming the Nikkei, as we were talking about earlier, Carson. Up about 0.6%. What do you make of these moves in the Australian share market? Positive moves in the wake of, I guess, global uncertainty.
Good morning, guys. Yeah, look, the moves this morning are a little bit surprising. The reason why I say that is, of course, is because the US will be closed overnight, tomorrow night for the Independence Day holiday. So, you know, we wouldn't expect that American traders and investors would be wanting to take on any risk. So it's surprising that Australian traders and investors do want to take on such risk. Of course, with the referendum in Greece on Sunday and not knowing what the outcome there is going to bring. So a little bit surprising today, but I must admit I'm pretty proud of the plucky Aussie bulls. You know, before the whole Greece fiasco a couple of weeks ago, I had a range on, or a target on the ASX 200 of 5,800. Obviously we didn't get there. It topped out at 5,700. The caveat there, of course, was that nothing bad happened in Greece, and of course it has. But if Greece gets resolved, and I certainly think it will, regardless of what the actual outcome is, there will be a resolution there. I think people are starting to realise that there's some value, and hence why we've seen gains for the past 3 sessions. So hoping for a good result on Sunday, and think a bit longer term we see the market back up towards 5,700.
What was your view, Chris, yesterday on Pacific Brands?
Yesterday on Pacific Brands, I must admit we didn't have one. We didn't hold a view on Pacific Brands.
Because they hit a yearly low, so they must have been. They hit a yearly low then, so they must have been on your radar. Why didn't you have a view?
Yeah, no, look, we from a trading perspective, definitely we run 52-week high and low technical scans, and it certainly came up on it. It just wasn't an opportunity that we were putting in front of our traders nor our investors. But coming out of the announcement this morning, we are quite, we're certainly more bullish on it than we were, and our view now is bullish.
It's an opportunity missed though, isn't it? I mean, the horse has bolted, it's up 30%.
Yeah, no, I don't necessarily think that it is. Look, there'll be some short covering today, and obviously the natural flow and effect from the upgrade or the new outlook. But you'll see analysts come out tomorrow and probably upgrade the stock further, and that will give it another kick. So we might see 3 or 4 sessions of gains there. And look, longer term, the bigger question is this a one-off in terms of their better results, or is this something that's sustainable? From the language of the announcement this morning, I think it's something that's sustainable. They've cut their costs. They've cut their costs at a corporate level. They've focused more intently on their margins. And they're all things that I would suggest are sustainable and can indeed continue to be improved upon. So they're, you know, it's a turnaround story. It's been a long time coming. It is in its infancy, but I think there's some pretty strong evidence there to suggest that it will continue for the foreseeable future.
I want to talk about the education space, just because Affinity Education came out with a downgrade today, and it's down about 34%, all-time low for that stock, 54.5 cents for Affinity. G8 Education's also weak, about 2.2%. What do you make of this sort of announcement today? Affinity, you know, announcing this downgrade, but also saying that it confirms the previous advice that a maiden dividend for FY15 of up to 60% of NPAT is expected. Now, of course, that is dependent on their profit, but paying dividends in this sort of environment, when you're downgrading, you know, your profit guidance, what do you think of that?
Yeah, look, honestly, I don't think much of it. Who did we see recently come out and suspend their dividend? Metcash, falling share price, tough environment. So it's I wonder why Affinity is doing it. I don't know much about Affinity. I haven't seen the announcement this morning, but talking in the context of GEM is not a business model that I particularly like. I don't think it's sustainable. Potentially they've been paying too high a price for their acquisitions, and we do have an outlook on that, and that is that we'd be on the short side. We certainly wouldn't be buyers. For traders we'd be short, and for longer term investors we wouldn't be buyers. So yeah, look, a tough space to operate in, but yeah, as I said, Ingrid, unfortunately haven't seen that announcement this morning.
What else is on your radar, Chris? More broadly, we've had a slew of calls this morning, everyone from Macquarie through to Deutsche Bank on some of those mining majors. So it all goes back to the iron ore price, which you see as heading where?
We see that heading south, Carson, and look, I was obviously tuned into the show this morning as you announced that Deutsche had slashed their price target down to $1.50. I'd like to say we beat them to the punch this morning. We put our research out at 9:30, and we have a $1.40 price target on Fortescue. Look, the iron ore price has overshot in both directions recently. It tumbled sharply. Some of the weaker marginal players were washed out of the market. It's overshot back to the upside. The Chinese, there's some word around that they want to cap on it at no more than 65. There's increasing supplies going into the seaborne market. The forecasts for Chinese steel production have fallen. Sam Walsh comes out overnight and says that they're going to continue with their production as planned, Rio Tinto that is. So the winds are definitely blowing in the direction of heading the iron ore price south. And look, we think once it does start falling consistently, the story about Fortescue and whether it's a viable operation comes back onto the table.
Have you got can you recall, incidentally, Chris, what your call on FMG was 12 months ago?
No, but again, I heard you say this morning, Carson, that it was about 503.
It was 503. So I'm just curious to know, because it's almost the anniversary of that yearly high. So to now be putting it at 140 as you are calling out today is just an incredible unwind, and you just wonder what role management has taken to front that and actually bear some of the culpability.
Yeah, look, I mean, again, their last production update, I think they had cut their costs, their C1 costs, and expressed that they could continue to cut them further. So I think they're working hard.
But they have yet to come out with a JV partner from China like BHP or Rio on the register, someone who would remain rock solid because they have a vested interest in supply.
Yeah, no, you're absolutely right, Carson. And when I can't remember who it was that did the deal with the Chinese recently, I said Fortescue needs to find a deal like that. And you're absolutely right, they haven't. And again, one of the reasons why their share price will probably continue to come under pressure. Look, it is more of a trading opportunity, I think. Well, obviously it is because we're on the short side of the market. I think it will overshoot again, just like the iron ore price is overshot. I think enough bad momentum will be built up in Fortescue. The knives will come out, and I think it can get to $1.40.
Okay, wow.
All right.
That's Dr. Doom for FMG. Chris Conway, thanking you.
Thanks, guys.
Okay.
All right.